Escorts and the farm equipment trend has been very strong. So the rural demand scenario as well is something that we would like to gather from Escorts, given the kind of uptick that we've been seeing in the monthly sales data, and of course the impact of increased raw material prices as well. Aggressive targets for 2022. Is Escorts now ready for the big leap? Let's welcome on board Bharat Madan, the Group CFO at Escorts, joining us on the show right now. Mr. Madan, morning. Your Q4 volumes have been extremely strong. What's the sense that you're getting as we slip into the new fiscal? Do you think this trend will remain, or would you say that what we saw last month was just an aberration coming in?
Well, I think it would be difficult to see the kind of growth we saw in the last quarter. It's almost 45% growth in the industry. I think it's seldom seen. So I think it was coming on with a low base of an industry. But now if your industry has already touched a very new peak, almost 700,000 units, 710,000 units last year. So already the base is very high. So we still expect, I think, given the kind of prediction we have on the monsoon front, it's likely to be normal, and given that it's an election year, we see a lot of reviews coming from the government and the subsidies from various states. So we still expect probably the industry can deliver a double-digit growth. But again, we must keep in mind this again coming on the back of the very high base of the industry which is already there.
Right. So while April, Mr. Madan, volumes have been a good 20% plus, it's relatively a smaller quantum of growth in the volumes compared to the first 3 months of the year. Why do you think that is happening?
So when obviously we see the season in April, which used to, like all the Navratri season, which used to be in April or split between March and April, this time everything was shifted to March. So that's why you saw very strong growth happening in the March month on the retail side. So April was bound to see some sort of correction. And second, obviously, like you mentioned, I think the commodities and other prices which is actually impacting the industry. So the inflation has been high, and we have also taken a price increase in April. So you'll see some sort of slowness, which also could be because of that reason in this month. But going forward, maybe in May, June, we'll see the stabilization happening and people coming back to the market.
What is your sense for the industry growth for FY19 for tractors?
Yeah, we're indicating a high single-digit growth, but given the good prediction on the monsoon front, we expect probably you can still go with the low double-digit number.
For FY18, do you think growth has beaten your estimates? Because I remember a conversation we had in April, May 2017, and you were talking about a early double-digit growth, and the growth has been phenomenal. Do you think this time also growth could surprise you?
Well, this time, like you said, chances are low because the base is very high for the industry now. Because last year we saw the industry base is about 580,000 units, and today we're already sitting at 710,000 units. So all the quarters last year, if you look at, were more or less linear, and the last quarter saw phenomenal growth happening. So we don't expect that sort of growth probably will be there. But yes, and you never know. I think we've seen surprises happening in the past, and we'll be keeping our fingers crossed if something like same thing gets repeated in the future too.
Any progress on any big progress on the export front? Because you've attempted to grow your exports business, but somehow you've not really been able to scale it up the way all of us were hoping for.
Well, I think we see the numbers getting better. So April obviously was one of months where the more focus was in the domestic business side, with the volumes are being ramped for the coming 2 months, which will be high season months for the industry. So, but you'll see the pickup happening again on export numbers from next month onwards. So I think we continue to show good momentum on export. So this time we're taking a target of 33-35% growth on export number over last year. So we expect, I think we should be there. But yes, like you said, we are still the lowest player in the export volumes within the industry. So there's still a lot of catch-up needs to be done from our end.
Could you broadly tell us where is your plant capacity utilization? What I'm trying to understand from you is that given that you are factoring in or baking in a early double-digit growth, do you need to expand capacity, or existing capacity you will be able to service more demand?
So last year we already hit almost 80% capacity utilization. So we are working on expanding capacity now. So this year we expect to probably, even if a double-digit growth, which will be almost reaching almost 100,000 units or near around that. So we'll be actually peaking the industry, and within the year also there will be a lot of peaks which will be there because of seasonality. So we are getting up for expansion of capacity. So we intend to increase it to about 150, 160,000 units. So probably by end of this year. So that work is on.
And just to close it up, if your capacity is full up and if you've expanded capacity, do you think initially that could have an impact on your return on equity and and your return ratios, because your return ratios will only improve when the capacity reaches a certain threshold?
So I think this year will be, like I said, will be virtually peaking on the capacity utilization front, and there's further investment getting planned now. So for this year, the capacity is enough, and we expect this year will be the best return ratios in that sort of overall utilization level. But obviously, once we do more investment on the capacity side, so some things do get impacted, and going forward, fully that will see some impact happening from FY20 on. But let's see, I think the industry, how it really behaves, so it continues to do well, and we also are looking at large export base. So that probably will fill up some of the capacity requirements for future too.
Okay, and one more closing comment. What is the update on the construction business and the railways business? What growth we should expect for those two verticals?
I think both of them continue to do well, and we expect, I think, both should deliver 15 to 20% sort of growth in FY19 too. And FY18 already has seen much better growth in both the businesses. So I think we expect the trend is continuing there too, and that should really see good growth rates.
Okay, Mr. Madan, we'll leave it at that. Thanks so much for taking the time out and highlighting what the monthly sales trend has been like and what you foresee in the near future as well.